Some investors earn massive returns during the year, yet spend most days worrying about every market move. Meanwhile, another investor earns average returns but sleeps comfortably because volatility no longer controls his mood. We often judge investing success by numbers alone, even though the emotional side matters just as much over the long term. Making money is difficult, but staying calm through volatility and drawdowns is often the harder skill. Many people become exhausted not from investing itself, but from carrying constant financial tension in their minds. Constantly checking prices, reading headlines, and comparing yourself to others can quietly turn investing into a source of stress. Welcome to The Margin, where we explore money, investing, and modern life through a calmer and more honest lens. Today, we will explore 7 signs that suggest you may already be winning at investing more than you realize. When people hear the phrase successful investor, they usually picture huge gains that seem to change a person's life overnight. Social media reinforces that idea every day by showing winning screenshots while hiding the stress that often comes with volatility and risk. A portfolio number can show a result, but it cannot reveal the quality of the decisions that produced it. Someone can look brilliant during a lucky year, but luck alone rarely survives an entire decade. Meanwhile, disciplined investors often appear boring because they rarely have dramatic stories to share. They may never become the center of attention, yet their consistency helps them survive long-term market cycles and drawdowns. Most people focus on outcomes, while far fewer spend time building a repeatable investment process. In investing, a durable process usually matters more than any short-lived moment of victory driven by market volatility. Markets constantly change direction, but investor behavior often determines who stays in the game long enough for compounding to matter. Before checking your portfolio balance, it may be worth asking what kind of investor you are becoming through the journey. One subtle sign of investing success is when you stop checking your portfolio every single day. In the past, every market move affected your mood, but now volatility no longer controls your day. Trusting your long-term plan creates mental space that daily market noise cannot easily disrupt. Another unexpected sign is when investing starts to feel a little boring. Healthy investing often feels ordinary because there is usually less drama to chase. There is no constant excitement and no need to stay busy reacting to every price change. Many people see boredom as a problem, but in investing it can signal stability and discipline. You stop looking to the market for entertainment and allow time and compounding to do their work. As investing takes less attention, your focus naturally returns to the parts of life that matter more. That quiet return of focus is a form of investing success that rarely appears on any performance chart. The third sign is that you stop chasing every new investing opportunity that appears in front of you. What once felt like a last chance opportunity now becomes something you can comfortably pass on. You realize that a good opportunity for someone else may not fit your risk profile or time horizon. Warren Buffett famously noted that investing has no penalty for letting a pitch go by, and many successful investors embrace that mindset. Their advantage often comes not from buying everything, but from choosing carefully and staying consistent. The fourth sign is that a market drawdown no longer feels like a personal disaster. You begin to understand that volatility is not a flaw in the system, but a normal part of long-term investing. During periods of volatility, you can still think clearly instead of reacting to every headline. That matters because the worst investing decisions are often made when fear reaches its highest point. The market may remain unpredictable, but your reaction to volatility becomes far more stable over time. The fifth sign is when your emergency fund feels more valuable than squeezing out a little extra return from your investments. Early on, many investors focus almost entirely on potential gains and want every dollar working at maximum speed. With experience, people often realize that financial security deserves as much attention as long-term growth. During the 2020 crisis, many investors sold assets during a drawdown because they needed cash, not because their strategy failed. That experience revealed a simple lesson. Financial resilience often begins with liquidity. An emergency fund may not deliver impressive returns, but it provides a different kind of value. It buys something that investors rarely measure directly: time and flexibility. In many real-life situations, having options is worth more than a few extra percentage points of return. As financial maturity grows, the relationship between stability, risk, and long-term progress becomes much clearer. Stability is not the enemy of compounding. It is often the foundation that helps compounding survive over the long term. A surprising sign of investing success is knowing exactly why each asset exists in your portfolio instead of owning it by accident. You stop buying things simply because everyone online seems excited about them. Every position has a reason behind it, and that reason comes from understanding rather than social pressure. It sounds simple, but many investors spend years without reaching this level of clarity. During investment bubbles, many people buy first and only think about risk later. When prices rise, confidence feels easy, but volatility reveals who truly understands their investments. Investors with a framework may still be wrong, but they understand the reasoning behind their decisions. That kind of clarity reduces mental stress because uncertainty no longer feels completely dark. Understanding does not guarantee returns, but it often helps people stay invested through drawdowns and market noise. In long-term investing, the ability to stay in the game is often a bigger advantage than finding the perfect opportunity. The seventh sign is caring more about consistency than short-term performance, because sustainable habits usually matter more than impressive months. Earlier, the goal may have been the fastest result, but now the goal is a process that still works during busy and difficult years. Instead of asking how to get rich in 1 year, you start asking how to stay invested through 20 years of volatility. That single question shifts attention away from speed and toward resilience when markets, careers, and life become unpredictable. Consistent investors rarely look impressive in the short term, yet compounding gradually turns ordinary actions into meaningful results. They understand that time is an asset and that meaningful growth needs room to develop without constant interference. Many people do not fail because of intelligence. They simply exit before their long-term strategy has time to work. That is why consistency becomes a competitive advantage, even though it often looks ordinary from the outside. The longer your investment journey becomes, the easier it is to see how patience often outperforms reaction and constant activity. Patience usually looks boring before it eventually looks wise, which is why long-term investing often feels uncomfortable before it feels rewarding. When you put all these signs together, a clear pattern appears. Healthy investors think very differently from anxious investors. They check the market less often because they trust their process more than daily volatility. They experience less FOMO because they no longer believe every opportunity must belong to them. They understand what they own because every investment has a clear reason for being in the portfolio. They value stability because real life happens outside investment apps and market screens. They protect an emergency fund because financial resilience has real value during uncertainty. They manage emotions better because they accept that risk and uncertainty never disappear completely. They focus on a long-term time horizon because compounding needs years, not weeks, to do its work. Most of them look surprisingly ordinary from the outside, with nothing dramatic to show off. In many cases, that quiet simplicity is the strongest sign that their investing system is working exactly as intended. Your portfolio may not have produced extraordinary returns yet, and the numbers may still look ordinary compared with what people post online. In long-term investing, success often arrives first as peace of mind long before it appears as a large account balance. One overlooked sign of progress is needing less emotional energy whenever markets experience volatility or temporary drawdowns. Consistency becomes easier when your time horizon matters more than daily headlines and short-term price movements. The most stable financial lives are usually built through small repeated decisions rather than one perfect decision. If this perspective feels familiar, you are already thinking less like a speculator and more like a patient long-term investor. At the margin, we focus not only on earning money, but also on understanding how money affects everyday life. Looking at these 7 signs, how many have quietly become part of your own investing journey so far?